Hey, good people, how you doing? Welcome back to Stock Up with Larry Jones. Come on down and hit the like and subscribe button. I feel like Eddie Murphy in Mr. Rogers' Neighborhood. You guys remember that Saturday Night Live? Come on. All right, let's get right into it. Good people, today is another day in the markets, and there's money to be made every day, whether the market is running up, down, or trading sideways. But sometimes the best decision is not to trade at all. But let's look at what's going on, and I want to make a reference to my video on yesterday. All right. First of all, listen, this one is brought to you by the Stock Squad. The Stock Squad. Come join it. It is the top link on this video. Stock Mo, myself, Keenan Grace, and Stocks with Josh are sharing with you guys our plays, okay? I want you guys to make sure that you invest in yourself, right? Let me quickly show you guys one of the plays that I made this morning. And as you can see here, the QQQ, we made 51% in 5 minutes, right? So is there all wins over there? There's not all wins anywhere, but we do a pretty good job. So you get the best of all of us. All right. That is the Stock Squad. Let's go. Listen, right now the indices are mixed. They are fighting to come back green. They're cooling off, as you could see. We had an open and then a downdraft, and they're actually trying to fight back. Then they're down again. Why? What is going on today? This is what's going on. S&P is flat as Wall Street awaits a Fed rate decision, right? So the Fed meeting is going on right now. It started today, and it will be going on today and tomorrow, I believe. And we are awaiting what the Fed is going to say about his rate decision. Now, there is a CNBC report that I want you guys to listen to as it pertains to the Fed rate.
Morning, Carl. In contrast to the market's aggressive outlook for rates, the CNBC Fed survey sees things happening later and sees them happening not going quite as far as the market expects. That outlook was bolstered in just the past few minutes by the better than expected JOLTS report. Just 9% see a March cut in the Fed survey. That rises to even money for May. Only in June is there a majority of 70% looking for that rate hike. While the futures markets may have priced in almost 6 hikes, respondents on average see just a bit more than 3. The Fed is expected to end quantitative tightening, the reduction of its balance sheet, that is, in November. Meanwhile, the probability of a recession remains elevated, but it's fallen to 39%. That's the lowest level since the spring of 2022. Looks like the 25 respondents on average are forecasting the Fed will cut rates every other meeting. You can see that in those little spikes in what you have there in September and December, along with June. While respondents predict a cautious Fed on balance, they think the Fed should be more aggressive. 56% say the bigger risk here is that the Fed cuts rates too late. 44% say the risk is going too early. Mike England of Action Economics writing into the survey, the risk is that the slowdown in both growth and inflation proves smaller than assumed, and the Fed moves too soon to lower rates. 56% of respondents say stocks are overpriced right now for a soft landing. That's kind of bullish for this usually bearish crowd. But 92% say, hey, if we have a recession, stocks indeed are overpriced.
Key points from that report, all right? Later and less now, right? Later and less. So 70% expect the first rate cuts to come in June. But that does not mean that's exactly what the Fed is going to do. This is a CNBC poll, right? Then the recession probability is down as low as 33%, right? And so, yeah, less rate cuts and later. So starting by this poll, people believe, about 70% of the people polled believe that the rate cuts will start later and there'll be less, not 6, right? Not starting in March and not as much as 6 rate cuts, but starting in June this summer and less than 6 rate cuts, right? And so that's what most believe. And I believe that too. I also believe that the bigger damage to the overall economy, especially the stock market, will be cutting too much too quick. All right. So that's what I wanted to talk about and shine a light on. I also, excuse me, want you guys to listen. Now, remember, we had a whole thing with Mr. Tom Lee, who has been calling this thing right all along. Now, he says something that I want you guys to please listen to.
When you came on last call last time, you made an interesting prediction. I want to play that. Here it is.
I think it's possible that we make a minor new high before the end of the month, and then we might have something like a 7% drawdown.
Since then, the Dow and S&P 500 have hit record highs. I mean, I think we're on track now for 5 days of new records. Are you still predicting a pullback, and what would be the catalyst there?
Well, as that clip said, we expected new highs by late January, which was on schedule. And I think this week is going to tell us how much further we go. You know, we were sort of penciling in 5,000, and we could maybe go higher. But from there, yeah, I think an air pocket forms because, one, as you sort of pointed out, investors will get nervous about the Fed and when they start tightening. And parabolic moves, which we've had since October of 2023, usually end in a pretty big retracement. So I do think we continue to be strong, but then after that, I think there's a big air pocket.
So we've talked a lot about the Fed here. Let's talk about earnings. You've got Alphabet and Microsoft tomorrow. On Thursday, you have Amazon and Meta. We've seen these big tech companies really focus on efficiency and where they're spending and where they need to pull back. And it looks like restraining some of the spending where jobs are concerned. What do you expect out of earnings, and how might that propel the markets?
Well, this is the biggest week for earnings. I mean, 108 companies report. The FANGs are reporting, both Tuesday and Thursday. And, these companies, I mean, they're big, but they do operate in different spaces. So I think if you have disappointments, let's say you have something disappointing from Apple, I don't think it's going to necessarily weaken the market broadly. It's going to hurt anyone who owns it. But I think for the most part, I think earnings have been delivering. I mean, this has been a pretty decent earnings season, and I think it's really confirming earnings this year should be up double digits.
So we have job cuts. You got UPS laying off like 12,000 people. And you got all of these companies announcing layoffs right now, right? And then what else we have here? Earnings. Earnings have been good, right? Speaking of earnings, good people, today, right? So we got the Fed meeting going on, and then we got earnings that's happening right now. Big tech, 25% of the S&P 500 and 50% of the NASDAQ reporting, right? Starting even today. I want you guys to stay focused on the overall market and what's going on. And remember, let's not get tunnel vision and just look at the stock that we are in, right? I'm trying to lose my voice again. So I want you guys, everyone that's watching me, I'm asking you to go back and watch yesterday's video, because for long-term investment, it will help a lot of you guys. And I had a lot of questions after yesterday's video, and I just want to clarify a few things, and I'm not changing what I said. I just want to clarify two things so I don't have to talk about them every single day. Digital World Acquisition. I stand behind what I see. I see that if Nikki Haley gets us shellacking in the polls and she will drop out, she will lose money because the big donors, they're already starting to turn, right? And then the donors got threatened by the big guy, right? This is like a mob movie. And so the cards are stacked against her. Let's just say, I can't say who's going to win, but the cards are stacked against her. I believe that Digital World Acquisition, ticker symbol DWAC, will have its biggest move yet. Not biggest move ever since it started, but I believe that this will be the last biggest move. Follow? Now, it could go up after that when he wins the presidency, but I see a humongous fall after that, okay? After all of that's done, I see a humongous fall. Me personally, I am going to be out when she drops out. I just want to be clear. I'm going to clarify that. And to be quite truthful, I don't care what happens after that. All right. Because it's a train ride. It's going to be a roller coaster ride. I like roller coasters when I was younger. Now that I'm older, I don't like them. I want to get off the roller coaster ride. All right. So let's take a look at this also too. I want to clarify. I want you guys to watch yesterday's video, but I know a lot of you are not. So I just wanted to show you this. This is today. I just snapshot this. As you could see, DWAC is up there again, 3% today, right? I'm still in. I got a few shares. You can't see it because I want you to see today's and I want you to see the open. But as you can see, Cypher, Mara, Riot, Bitfarms, these are the crypto miners that everybody's asking about. They are pretty flat today. Bitfarms is down by 3.5%, right? And let's look at this. Hut is down by 7%, right? TerraWolf is flat. CleanSpark is flat or down by 1%, right? And then you see DWAC again, right? So now, Larry, you're saying that it's over. It's over. No, I didn't. I never said it's over. 99.99% of you guys that watched my video yesterday, you guys got it. But for those of you that don't understand, I'm going to say this and be done with it. I am, as you can see, dollar cost averaging. What am I dollar cost averaging in? The big three, right? Mara, Riot, and CleanSpark. The big three by market cap. There will be smaller market cap Bitcoin miners that will run more than the big three. Me, myself, I like to have the biggest in any area because it is the safest from volatility. But the problem is when the halving comes, if you understand the crypto cycle, these companies that are not positioned right, a lot of them will go away. And by 2025 into 2026, half of these will be gone. I am into safety. Now, am I going to have a little risk? Excuse me. Yes, I am. But it'll be 1/10 of the big three. So I am dollar cost averaging right now. Why, Larry? Because we don't know where it's going next week, next month. We don't know the totality of the effect of the spot ETFs. We don't know this. We are in uncharted territories. But so far, for the last 2 years, actually the last 4 years, I've been calling these right? And right now, I just kind of see blocks of time where I just see where it's best for me to DCA rather than to buy chunks. You guys have been with me for a while. Those of you that's been with me for a while, you've seen me buy big chunks. You see me do call options. You see me do put options. Right now, I'm not doing options on these Bitcoin miners. I am just simply DCAing, and my P&L is green, but from day to day, from red to green, I'm just going to continue to DCA. And if it falls greatly by double digits, some of these, then I will simply go in heavier. That's what I'm going to do. I do believe that if you have some Bitcoin miners right now, I wouldn't just buy big chunks right now. I would DCA right now. But if you do have big chunks right now and you are down greatly, I do believe that if you just wait, it'll come back. All right. I'm going to leave it right there. Let me know what you think about the Fed and when do you think is his first interest rate cut will be, right? The meeting is going on right now as we speak. And I want to hear from you. Do you think we are going to have a retracement? All right. I called January correct, but the truth be told, the rest of this year, I don't know. I'm just going to take this data and just trade the market that we are in, right? My thing is I want you guys to be protected. And you know what? This is going to be a long one, but I just want you guys that didn't see it, I want you guys to see this again because I know you're not going to watch the entire video from yesterday. Now, look at this. You know what? You can see here that in cash, I'm still cash heavy in here. You can see that some of my growth stock are up, right? And what I really wanted to show you is this. Look at NVIDIA. And this was yesterday. NVIDIA up 144%. I'm up higher than that now. And my question is, would you rather have all of your money into something like DWAC, or would you rather dollar cost average into good, strong companies, right? Good, strong companies. It's like the 72 rule. These are the companies I'm not worrying about a retracement and losing 50%, right? Now, they have room to come down, yes, because it's part of the big tech. But when I look at companies like this, like Microsoft, like NVIDIA, like Amazon, Google, Apple, and Tesla, which I am DCAing in right now, I'm just going to tell you guys, I sold some Tesla, but right now, according to your earnings, I am DCAing $1,000 a day right now. And the truth be told, I'm hoping that it comes down. Now, I'm only going to do that for 10 days because in one of my portfolios, that's how much Tesla I want in this time period. And if it goes down because big tech is reporting, then I'll be glad. And if it doesn't, I haven't missed out, right? Now, for you, that might be $10. It might be $100. But you do what's suited for you and never, ever, ever overtrade, all right? Hopefully something I said helped you guys. Make sure you join. If you really want to get these hot plays, make sure you join the Stock Squad. Again, you could look. There'll be a link provided. You should see a link there right now. You can click it and go right to it, or check the description below. You get the best of all of us, the Stock Squad. We are absolutely giving you our best plays in real time. All right. We'll see you later. Live, love, laugh, and learn. And most of all, on this page, earn. All right. Live, love, laugh, and learn.